All right, today we're going to break down a pretty fascinating case study. What you're about to see is a visual documentation of a full market DNA cycle for copper. We're going to follow this thing from the very beginning, from the plan, all the way to the final outcome. The idea here is to walk through this entire process, phase by phase. We're just going to observe the events exactly as they played out. It's important to know everything we're looking at is based strictly on the data and the images provided. So with that said, let's jump right in.
So first up, we have phase one, which is all about the plan. This is the foundational stage where the entire setup is laid out. We're looking at February 17th, 2026, when all these key parameters were defined and locked in.
And right here on the chart, you can see it. The cycle officially gets underway. The price of copper hits that primary entry level. You'll see it marked with an M, and the price is exactly 5.6613. Now, from the very beginning, the plan laid out two possible entry levels. First, there's that primary entry at M, which, as we just saw, the price has already hit. Then there's also an optional secondary entry. That's at PC. This kind of two-level approach is a really central part of the risk management here. Okay, this is where it gets really interesting. The risk parameters. Remember, all of this was defined before a single move was made. The whole plan works with a hypothetical capital of $100,000. The time frame? A 20-day duration for the cycle to complete. And really key, it establishes a firm maximum expected drawdown of only 5%. So you might be asking, how are the trade sizes actually figured out? Well, it's a very specific methodical process. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. The plan doesn't just stop at entries, it also lays out three potential exit targets. Target 1 is what's called the mirror line, or the lower trapezoid boundary. Target 2 is up at apex N, which is marked as a safe exit. And finally, target 3 is the top of the trapezoid, and that's considered the full exit. So with those entry points and targets in mind, two possible return scenarios were mapped out. And again, this was all done right at the start, before anything happened. Scenario 1, which assumes only that first entry is used, projects a return of 0.95%. Scenario 2 is a bit more ambitious. If both entries are hit, it projects a return of 2.04%. All right, so that's the setup, that's the plan. Now let's get into the journey itself. We're going to see how the price of copper actually moved between February 21st and February 24th. So here we go, the first big event of Phase 2. On February 21st, you can see the price comes up and makes contact with the mirrored delay line, and that touch happens at a price of $5.8712. Then, just a couple of days later, the price keeps on moving. On February 24th, it climbs up and reaches the apex N level, right at $5.95.66. And hitting that level, that signifies the end of Phase 3. So let's do a quick recap of the timeline so far. Phase 1 kicked off back on February 17th. Phase 2 was completed on the 21st when it hit that mirror delay. And Phase 3 wrapped up on the 24th at apex N. You can see it's a pretty clear progression, all within about a week. And that brings us to the final part of this story. We're now in Phase 4, the outcome. Let's take a look at how this whole cycle came to a close on February 27th. And here it is, the conclusion of the entire cycle. You can see the price climbs all the way up and reaches the top boundary of the trapezoid. That happens at a price of $6.115. And this event right here, it officially brings the cycle to an end. This part is pretty incredible. It's a side-by-side comparison of the plan versus the outcome. The return? It was exactly what was projected in that first scenario. But look at the maximum drawdown, way lower than what was allowed for. And the time it took? The whole thing was done in less than half the expected time. Let's look at the numbers. The final realized return came in at 0.95%. That perfectly matches the projection for Scenario 1. What this tells us is that the cycle played out exactly as planned for a single entry at that initial M level. And what about the timing? Well, this thing wrapped up fast. The entire cycle, from start to finish, was over in just 9 days. That's pretty remarkable when you remember that the original plan allocated a full 20 days. Okay, before we wrap up, it is absolutely essential that we cover the disclaimers. Please remember this is not financial advice in any way. Leverage above 10 is prohibited, and you should never invest essential personal funds. This analysis is simply part of public model documentation, and it's for verification only. And finally, risk management must always follow the provided instructions. And that concludes our documentation of this particular market DNA cycle for copper. What we've really just witnessed is a clear case of a predefined plan being followed from the very beginning to the very end. If you're interested in seeing more documentation like this, you can always visit the website you see on the screen. Thanks for tuning in to this explainer.